Hello and welcome back to Money Never Sleeps. My name is Timur from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mandawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. During today's show, we're going to discuss some year-end financial to-dos that can help you prepare for a stronger 2025. A Bankrate article, Greg McBride's end-of-year financial checklist, 15 tasks to complete articulates many things I also address with my clients during their year-end appointments. The first slot on your year-end financial to-do list is reviewing your spending habits, and then use that review to help you build a stronger 2025 budget. Though it's cooled since its record highs of a few years ago, many Americans were still impacted by inflation in 2024. Grocery store runs, fill-ups at the gas station, family vacations, and trips to the movies were all things that came with a high price tag than we say before the pandemic. As you look back on your 2024 spending, what jumps out at you? Did you spend more on nice-to-haves rather than essentials? Is your emergency fund getting dangerously low because you skipped a few contributions to spend that money on something else? Next, you should consider how much success you've had in paying off your high-interest debt. How much debt were you carrying at this time last year, and how much are you carrying right now? Is it more, less, the same amount? If you're likely to wrap up this year with the same amount of debt that you began the year with, you're going to need to create a new strategy as we enter 2025. Don't forget that debt is often nothing more than a large financial hurdle resting right in the middle of your route to your ideal retirement. As you seek to rid yourself of as much debt as possible in 2025, take concrete steps like reducing expenses, even if you only do so for a chunk of the year. Cutting back on your spending for just 2 or 3 months could hand you the extra cash you need to take a big bite out of your debt. Your next wise move may be to review whether you've hit the savings targets that you made before the year began. If you haven't, be sure to adjust your strategy as needed before we ring in the new year. Remember, an ample amount of savings opens numerous financial opportunities. For example, if you head into retirement with significant savings, it becomes much easier to not only maintain your pre-retirement lifestyle, but to enjoy a retirement full of adventure and new experiences. Moreover, a solid amount of savings may also position you to withstand spending emergencies that you'd otherwise have to put on a high-interest rate credit card. If the freezer gives out a week before you're hosting a dozen family members for a holiday meal, you have to replace it. But when it comes time to pay the bill, it's better to use your debit card rather than a credit card. If maxing out your 401k was one of your financial goals this year, make sure you make any final contributions before the last day of the year. If your employer offers a holiday or year-end bonus, think about dedicating that money to your 401k. And if your employer offers a 401k match and it's not already maxed out, take the necessary steps to do so. The article's next recommendation is to meet with your financial services professional about potentially utilizing a Roth conversion. As the article explains, if your income went down this year, you may want to take advantage of your lower tax bracket by converting a retirement account like a traditional IRA into a Roth IRA. By doing so, you'll pay taxes now for tax-free withdrawals during retirement. Bear in mind, however, that a Roth conversion isn't going to be a solution for everyone. For example, if you think it's likely that you'll be in a lower tax bracket in retirement than you are right now, a Roth isn't a solution. Before making any financial decision about a Roth conversion, it's important to discuss the matter with your financial services professional. Next, you should assess your present asset allocation and, if needed, rebalance your portfolio before the year ends. While inflation continued dropping in 2024 from its pandemic and post-pandemic highs, prices for many everyday products and services remain high. Accordingly, you may want to meet with your financial services professional to consider your current mix of investments. Rebalancing your combination of stocks, bonds, cash, and other investments near the close of the year may help you begin the new year with a fresh perspective. We don't have enough time during a single episode of our show to discuss everything you need to be aware of with investing, so I recommend working closely with a financial services professional for your investment needs and goals. Reviewing your chosen beneficiaries prior to December 31st is another essential task to cross off your year-end to-do list. Adding or deleting a beneficiary on an account is an important part of making sure your instructions are followed and that your assets end up exactly where you want them to. And don't forget that the beneficiaries you list on your financial and insurance accounts take precedence over what you state in your will. It's therefore essential that the beneficiaries you've listed in your will match those you've listed on your various policies. You should also harvest your tax losses. The article explains that you may be able to write off some of your investment losses. With regard to your income taxes, the IRS calls them capital losses, and you may be able to use them to reduce your taxable income and provide yourself with a modest tax break. But you should note that your losses must be realized, which means that you must have sold the stock to receive the deduction. Furthermore, you must do so before the last trading day of the year, which is generally December 31st. You should also review your flexible spending account, more often referred to simply as an FSA balance, before the end of the year. If you're utilizing an employer-provided FSA, note how much you have left to spend because the money is use it or lose it. Some employers offer a grace period that generally ends in the middle of March in the following year, thus providing you with an additional 2.5 months to spend the money you've set aside during the current year. But if your employer doesn't provide a grace period, make sure to spend the entirety of your FSA before December 31st. Re-examining changes to your benefits and completing the open enrollment process is another critical move you should make before the year wraps. In many cases, the year's final quarter is the beginning of open enrollment, which is your opportunity to select or make changes to your benefits before the new year. If you haven't yet done so, carve out some time to review your benefits to be certain that your employer is providing what you need. It varies from employer to employer, but there's a chance that missing your open enrollment period means you'll have to keep what you chose in the previous year or simply go without benefits for the year. Clearly, the significant cost of healthcare means that not having any benefits at all could have serious financial consequences. If you've gotten married or had a child, open enrollment is your opportunity to add them to your benefits. And if you haven't already established an FSA, open enrollment is your chance to start. If you have any questions about your retirement magic number, your retirement strategy, or any other parts of your financial strategy, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure. All matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government.